Welcome to TradeTheNBA.com. This is John. This report is for the 5th of August, and well, we're right on schedule with just about everything. I mean, we met the first level of positive extreme retraces on the break below the 76. We continue to see DOC spread weakness. Again, the steel had to get above Cyan. Still has a chance to do so, but it's running out of time. Usually has to be within about 4 days. So we're in the third one right now. Doesn't look like it's about to take place. Again, the target right here, which is this positive extreme, for a low of 28.16. We had the nice call for the previous ones based on the 5K that we had alliterated, and that was why we were shorting right around the 3,010 marker, and well, turned out to be quite nice. I have to check and see what the high from this bar was to verify. If we look, the high of this bar was all the way at 3,014 and a quarter, so it's off by about 4 points, but hey, so what? You know, at the end of the day, we're all the way back to the 50%, so this will be a key indication here. Doesn't look like it will hold that 50% because we have a little ways further to go, but doesn't mean that we won't attract some buyers intraday back and forth. It's still pre-market, but nothing's changing with China announcing that they're going to not buy agricultural products, blah, blah, blah. So trade war, in effect, yes. Who will capitulate? Well, certainly China is probably in a weaker position economically overall than the U.S., so we'll see how it plays out. But hardball negotiation tactics, sometimes it's what it takes. From an NQ standpoint, looking identical. So from that standpoint, we're all lockstep. And of course, like we talked about, there was no way the U.S. was going to let the euro slide, and so this will help defend the S&P, try and bolster it with a little foreign currency, plus they just want the euro higher anyway from a trade standpoint. And oil isn't going to do anything, so we're not really concerned about that one. And gold should still continue its push towards higher highs despite no real inflation indications, but it's about the unease that's growing throughout the world. From a 5K standpoint, if we look at the current futures opened, and we just cascaded, and I stayed up actually quite late to follow a lot of this in the early decline, which is why I'm late getting you this report, because it was all the way till 3:45, 4 in the morning. We were already down here at the 29:05 from at least a European time frame. And so here's an interesting one. So we talk about these resets. So yes, in fact, this buy setup is good. But the critical point for it is that when you have the steel coming from a non-reset, where meaning it didn't come below like this, cross above to signal the potential of a move, the green moving over the cyan is the critical point. But when it breaks, as it did here, and you get your confirmation there, you kind of know it's over. This is the secondary aspect of what I'm putting into determining the broader trend runs of non-steel reset moves. So even though you had the dip of orange, does all the things, proper pivot, move above 13.5, all going good, except for couldn't sustain it, is literally what this depicts. And it gives you time to get out, and usually at a decent gain. If you look at it from the gold entry point, 28.97. By the time that you get the first indication, which is where cyan moves above green, and it's subtle. Green is at -5, cyan -4. That's all the way up at 29.01. If you needed the further confirmation, which is the big separation right there, 29.04. So from your 29.04, you still have, 7-point move to the upside before the cascade down. It's just a neat way to be able to exit. And in this case, we already had the 29.05 from a previous algo level. So even if you had taken that one as the opportunity. Either way, it depends on where you were in the world and whether you were awake for it. But I'm just saying, from a future standpoint, when you see this, that's a pretty good indicator at that particular spot. And then again, we had a chance here for reset. Steel didn't happen, so that's why you went all the way back to the lows. And again, those separations are very clean. It's easy to see. So it's all good. If we look at the action from Friday, it was wrought with peril. Scroll back even further. Started out as a short, and then again, this is that we didn't have a steel reset until right about here, which even letting you know that you finally have the steel reset. And we had, of course, the cyan move below red just above that 23% right down here, making for a pretty substantial decline. Even if I just put the arrow right in here, we can go right there, 29.24, from all the way back up here when the short was well over 20 plus points. Easy as it gets. But even in the pops, every time you had a DOC spread short, clean move, came all the way back to the 23%. Did not reset in this one, but the rising red, once it broke above 7.5 on this, pretty steady. I was looking for any kind of buy configuration, and you ended up getting really close right here, and it turned gold with the rising gold, at the same time orange dip. That was enough to just push it, but didn't even get it back to the 100%, which was anemic at best. But it reset again one more time, well, actually several more times with these steel resetting coming down below. And that then gave for a bigger push, which created, another DOC spread. This time, though, with steel coming from underneath. And this is the criteria that's, I can kind of show you because I have it on a 50K. Right here, it's identifying the DOC spread trend runs, and looks to then flip when we have cyan underneath red for a gold candle. It was just paint dots right now on a show me study, and the idea being is that this way we can then establish the criteria in between that will allow for making easy trend, broader trend. I mean, I'm talking 100 plus point type maneuvers, but still letting you trade within what you know to be a down move, because what that does is, in my mind, it changes what we're looking for objective wise from a stop standpoint. And that, not just a stop, but also from a target moving up. You know that you're going to hit likely 50% returns and stops, and the following 100% are usually going to meet price along that route, and so those become more interesting. You're more concerned about break-even setups when you're trying to go long within that broader short. That way you don't get caught on the wrong side of that broader equation. You can see even before the market closed Friday, we ended up with the DOC spread, had the short return, and the key I'm always looking for in this case is right here, when these two get close together, and then there's a separation. And that was the signal that the short was going to go in. The final nail would be this steel coming below cyan, which it does right at the timeline of the open. And you can see what that has led to, which is a massive decline. Relatively speaking, it's actually a pretty decent one, given percentage-wise where we're at. We're minus 1.5%. That's pretty good. So, like we talked about just before this all happened, that everyone would run for the door at the same time, and that it wouldn't be big enough. And this is what happens when it's not quite big enough. Wait till the actual market open, and you'll see how desperate some people get to want to be free of it. They're probably already panicking right now. Pre-market will be opening shortly. So, as always, trade well. We'll talk again later.